get you a very interesting discussion on the show, and that is got to do with long-term investors, because for long-term investors, the one thing to watch out for is the profitability trajectory. Gautam Duggad, Head of Research Institutional at Motilal Oswal, is talking with us now. He's done a very deep dive in corporate India's profitability trends, and not only a few quarters back, but almost 2 decades back. And here he is joining us to talk more about that. Gautam, always a pleasure chatting with you. Talk to us about 2003 onwards. You looked at and analyzed phases of corporate profitability trends in India, and now you are joining us with that research. Talk to us how different phases the profitability has trended, and where do we stand now?
Hi, Ajay. Good afternoon. Pleasure to be here. So, as you pointed out, we've looked at corporate profit to GDP in our latest report, which we released yesterday. We keep updating it every year. So, in this report, we've analyzed it over 3 different phases: 2003 to 8, 8 to 20, and now 2020 to 23, because the 2023 earnings just got over a week back. So all of us know that 2003 to 8 was the best era of corporate earnings, when Nifty itself had a 25% earnings CAGR. Corporate profit to GDP has, at that point of time, gone up to 5.1. If you look at just the NSE 500 companies, and 7.8 was the peak if you add up the unlisted companies. From then onwards, 5.1, we bottomed at around 2% in 2020, because we spent almost a decade of lackluster in an era where the earnings were very lackluster. In fact, 2010 to 20, the earnings compounding of Nifty was just about 6.5%. So the profit to GDP kept meandering down from 5% to about 2% in 2020, where we bottomed out. And from 2% bottom of 2020, we moved to 2.2% in 2022, right? From 2% to 4.3%, so almost more than a double. In that period, you saw earnings for NSE 500 companies went up significantly. In fact, it doubled in that 2-year period itself. Now, FY23 versus FY22, where NSE 500 earnings have compounded at about 8 to 9%. And therefore, the ratio has come off a little bit from 4.3 to 4.1%, because your nominal GDP, which is the denominator, has grown at about 16%. So from 4.3 to 4.1 is a slight moderation. And also FY23 saw significant drag coming in from metals and oil and gas, these 2 global commodities. So these 2 sectors alone dragged the profit to GDP down by about 70 basis points, whereas financials and auto have pulled the profit to GDP up by about 40-50 basis points. The rest of the sectors were pretty much stable. So that's how you saw about 20 bips decline. 70 bips drag from global commodities, and 50 bips lift from financials and auto, right? In terms of absolute profits, you had about 4.5 lakh crore of profit in 2020 for this NSE 500, which we are using as a proxy for corporate profit, because NSE 500 is roughly 92% of the market cap, right? So from 4.5 lakh crores of profit in 2020, right now we are at about 11.1 lakh crore in a period of 3 years. So it's more than doubled. It's grown around 50% for 2 years. And then this year it has grown at about 8 to 9%. So as we stand, we are at about 4.1%. For FY24, our own estimate for Nifty 50, not NSE 500, for Nifty 50 is about 20% growth. So quite naturally, you will see profit to GDP inch up further, because I don't expect nominal GDP will grow at similar level now, because your inflation has come off to about, yesterday RBI gave a projection of 5.1%. And if real GDP grows at about 6.5%, we're talking about a 12% odd kind of a growth in nominal GDP. And if these estimates are not downgraded, we end up doing about 18-20% growth for NSE 50. And if I take a liberty and stretch that for NSE 500 also, because we don't cover all the 500 companies, so we don't have estimate for NSE 500, but NSE 50, our estimate is 20% growth. Then you are talking about a profit to GDP inching up further from where we are, because this is just a beginning of a new cycle. By the way, we've seen now 3 consecutive years of a double-digit earnings growth after a decade of a lackluster earnings. So 2021, you have seen about 15% growth. 2022, the growth was about 35, 36%. And this year, we have ended with about 11% growth in Nifty. So that is how we stand. Still a long way to go as far as profit to GDP of the previous cycle is concerned.
Right, Gautam, this is Vinny joining in the conversation as well. And, I just want to understand, obviously, you gave us your expectation for FY24, but just in terms of the sectors that you were mentioning, the global commodities, that was one which dragged this time in terms of the corporate profit to GDP ratio. Will that continue to be a drag in terms of FY24 as well? And, will BFSI obviously continue to shine then?
So let me take it one by one. On financials, we expect the growth to continue, but now it is normalizing. I mean, just to give you a context, in FY18, the profits of financial companies in Nifty was 45,000 crores. That has gone up to 210,000 crores in FY23. So profits are up almost 5 times in 5 years for financials. Going forward over the next 2 years, in Nifty, we're expecting this profit pool to touch about 3 lakh crores. So from 2.1 to 3 lakh crore in 2 years, it's a CAGR of about 18%, which is pretty decent, given that it is coming on a very high base. In fact, in FY20, the total profit of the 50 Nifty company was 3.5 lakh crore. And we are talking about a 3 lakh crore profit of just about 11 financial companies in 2025. So that's how strong the cycle has been for financials. As far as commodities are concerned, we expect some rebound in FY24 and 25 from the very low base of FY23. Just to give you a context, at the bottom in FY20, the metal sector's profit in Nifty was 7,000 crores. In 2022, from that very low bottom, it went up to 75,000 crores. FY22, Tata Steel alone had a profit of 40,000 crores. But between FY22 to FY23, things have once again worsened for the metal sector. Profits are down from 75 to just about 22, 23,000 crores. So it went up 10x in 2 years from a very low optical bottom. And then in the last 1 year, it has come down by 2/3. From here over the next 2 years, we're expecting this profits in metals to be about 40 odd thousand crores. So it will look again very good because you're comparing from a low of FY23, and that can help the profit to GDP ratio going forward. So this is our view as far as these two sectors are concerned on profit to GDP metrics.
Gautam, I heard you say that you're quite confident that a new profit cycle is taking shape, and usually this lasts for a few years whenever it turns. So how's the visibility of profit growth? I'm not even talking about the pace of growth, but I'm talking about direction and durability. If next 3 to 5 year kind of a view, do you see this cycle actually continue and trend higher?
So I just look at it in different segregated components. There are three key vehicles on which India's profit cycle rests. One is financials, second is consumption, third is investment, and fourth, if I may say, is commodities. Financials, we all know we are living through absolutely Goldilocks kind of a time. When was the last time you saw PSU banks profit pool crossing 1 lakh crores, doing 17-18% ROE, and a net NPA ratio of 0.6 to 0.8%? Our view is that the financials earnings can continue to compound very well because we are still talking about a 13-14% GDP growth. While margins can come off a little bit, you still have some help from the provisioning cost as far as PSU banks are concerned, while private banks growth will look far more normalized. Second is investment. And we are seeing some good evidence now after a long time. We've spent almost a decade where the investment cycle or private capex cycle is just not there. We are seeing that happen now. In the last 1 year, you've seen earnings of capital good companies, right? So this cycle is just about begin, and we expect the private capex cycle to pick up momentum further over the next 3 to 5 years. Government has spent a lot of time and energy on encouraging manufacturing, PLI. In fact, government's own capex budget on the central government side has gone up 4x in the last 5 years. So that is now starting to pull in the private investment. That is the second leg. On the third leg, which is consumption, which is been very lackluster last 2-3 years, we're expecting the rural consumption to bottom out now, and which is why we turned big time overweight on consumption a couple of months back when we did our model portfolio revision. And the last leg is commodities, where I don't have much sort of a visibility which way the things will rest, because it's all dependent on how the global macro shape up, what China does, what are the underlying commodity prices. So that always remains a question mark, both on upside as well as downside. But large part of the corporate India's profit pool is looking set for a compounding over the next 3 to 5 years of at least 14 to 15%, if not more.
Thank you so much for joining in with us this afternoon on Markets at Noon.